Hi, I'm Michelle Castle with Guild Mortgage, and I have with me today Michael Stockton with Ace Credit Consulting.
Hello.
I can tell you I've been in the mortgage lending industry. Michael, you can wave and say hi.
Hello.
I've been in the mortgage lending industry since 1996, and the question about credit is always like everybody's got a question about credit. But credit doesn't just affect home loans, it affects every aspect of your life. So, what I wanted to start doing this year is providing you some great information that you can take with you, use, learn for the rest of your life, and share with others. Because, like I said, credit affects every aspect of your life, not just the home lending. And so oftentimes we have misunderstandings about the actions that we take or the things that we do and how it affects your credit and credit scores. So you have credit history and then you have credit scores. And, something, Michael, that we didn't talk about that I do want you to also address just briefly is everything in your history affects your scores, but not all scores are the same. Not all scoring systems even analyze the same or the information the same way, nor do they give the same score. So a
Correct.
lot of times people have that misunderstanding about why when they talk to us, the credit score we're saying that they have is so different than the credit score that they're showing on whatever model they're looking at. So will you speak to that first? And then we're going to talk about whether or not paying off a collection is a good idea or a bad idea. So those are the two things that I want to be sure that we address today.
Sure. The problem with scoring is you can go to 20 different websites and get 20 different scores. Each company is going to have their own algorithm of how they calculate things. You have the FICO scores, you have Vantage 3, and the Vantage, sometimes you'll have it as, let me bring this up here real quick. So you have a Vantage 4, a Vantage 3, FICO score 8, FICO score 9, and it calculates things differently. Whether it's a mortgage payment that has been paid late, if it is a medical bill, some companies will state if it's a paid medical bill, it doesn't affect you as much on a Vantage score, a FICO score, it will. So like I use Privacy Guard for a lot of my clients, and there's some other sites we go to as well. Credit Karma, a lot of people use Credit Karma. It is free. The content on there is very good. Sometimes the scores are correct. Sometimes they can be off as many as 100 points. And it's all based upon the recency of some of the negatives, if they've had positive trade lines established for how long, credit card balances, installment accounts, how long they've had open. The months in review on something like that. So I've had a lot of people that they think they're a 680 credit score. They go to get a mortgage loan and they're a 580. And it's tough to explain to them exactly what they're looking at is not accurate because you see it all over the TV. Go to Credit Karma, you get your scores for free or wherever, Experian.com. And the problem again with that is you go to them directly and they have their own scoring system. So even at Experian, Equifax, they may give you a score, but it's not going to be the same as what a mortgage company would look at.
When that conversation comes up and it comes up often, why is the score different? And then people get super frustrated. But what I remind them is the importance of knowing the information. It's still important. You can't have access to the same FICO scoring system that we do, but it's not that's not the point, is to know your exact score. The point is to pay attention to what's on your credit report and make sure that you do you take the action that is necessary in order for your scores to be as much as they can possibly be with your current situation.
Correct.
And that's what I want to make sure that we talk about for the next couple of weeks is like, what can you do that does impact your score, knowing that the score is going to be different based on the scoring model that you're working off of. It's still the information is still all relatable. It's just the score that's different, right?
Correct. The content should be the same. I'll even look at people's Credit Karma sometime. I won't really look at the score, but I'll see the content to see exactly when an account was open, when it was closed, If it was paid off, when did it get paid off? Late payments. So the late payments, all the accounts, it should be exact on any report you go to. It's just how they're going to calculate the scores as to where somebody would start versus what a mortgage company would be. So again, if somebody's 50 points off from, let's say, Credit Karma versus a mortgage, and they can get their scores up another 50 points on Credit Karma, then it should be 50 points higher than what the mortgage. They're just having a different starting point from, again, what the mortgage company would be. So their starting's different. It's just if they get 50 points, they should get around that same on a mortgage, good or bad. If they have a new late payment, it could drop it, at least that. And it's tough to explain to people why just one small late payment can cause such a big impact in a credit score.
Yeah. Well, and that's another conversation we're going to have on another week too. But it's just a reminder that it's just super important. Just like every so often, you may or may not get on the scale every single day, but you still need to have an idea what weight if you're working on improving your health, at some point in time, you need to step on the scale. And if my scale may be a little bit different than the doctor's office scale, but you're still, if you're working on a health plan, you're still taking the actions. It's going to affect the scale no matter where, whether you weigh yourself at the gym, the home, or the doctor's office. It may have 3 different weights, but you still can see the actions you're taking and how it affects your weight. Same thing with your credit score. So that's my analogy right there.
That's a good one.
Yeah. So, all right, let's talk about the collections. So this is the scenario that I fear for right now. And part of it's because it's a scenario that is it rings true for me. We've got a medical bill that came in the mail the other day, and we just changed health insurance plans, or not plans, but it just, we've got new cards. So my assumption is the doctor's office doesn't have my new card, and that's why they're billing me for the services rather than the insurance office. I'm sure they tried to bill the insurance office, and for some reason, the information didn't sync up. So now I have a bill. And trying to go to the doctor's office to pay the bill is not so easy anymore because doors are locked and they are appointment only and they're funky hours. Getting a doctor's office on the telephone so that you can actually pay the bill isn't so easy either. And the phone number we're calling is not even in town because it's a billing service. So knowing what I know about medical collections and how much they affect the credit score, my paranoia is if we don't get somebody on the phone and get this taken care of quickly, in the meantime, work with the insurance company to get the card updated and all of that stuff, I could end up with a medical collection. Knowing what I know, that could drop my score a lot. Right. And so let's just talk about, so in the event that did happen, and I end up with a medical collection on my credit report, it hurts my scores a lot and could be 100 points for one $40-something medical bill.
Right.
Now what do I do?
Typically what I'll tell someone is if it's already with a collection agency, you want to try to contact the doctor or hospital to see if they will take a payment and do a pay for deletion. So they can contact the collection agency to tell them it's been handled. They can rescind it and take it off of the credit report.
Say that again. You're going to call the doctor's office or the collection agency?
I would first start calling the doctor or hospital to see if I can get them to accept the payment and then have them rescind it from the collection company. If that doesn't work, then I would contact the collection agency to see about doing a pay for deletion, to see if they would accept either a payment in full or a settlement. But I want a letter that states they're going to delete it from all 3 credit bureaus once it's paid. Without that letter, if it's already on your credit, it's just going to update. And that's kind of I've had some mortgage people say it doesn't hurt your credit scores when they pay it. I've been doing this a long time and I see where it happens all the time. If somebody goes in and pays something off, it does update the date of last activity. Therefore, it would lower the credit score.
Yeah.
So I always want someone, if you're going to pay something off, to try to work in getting a letter of deletion. So therefore, you have something that's tangible, that's in your hand, that you can contact the bureaus if they don't remove it within, let's say, 45 days. And you can also send it into the bureaus to have them remove it as well. So you're kind of hitting it from two different sides. But always try to get a letter of deletion, no matter what it is, medical or otherwise, before you go
What
in and
if
pay
it's a
that off.
$20,000 medical bill and I don't have the ability to write that check and it's a 2-year-old collection? Is that where I just leave it alone?
I can't legally say that.
I know.
But that's something to where, especially if you don't have insurance, you're kind of stuck because, they can come in and sue you for up to 4 years in Texas for really anything. So, on something like that, I would try to negotiate it down. A lot of times they're trying to bill an insurance, and if they don't have it, they really don't do a cash pay. So sometimes a cash pay will be a third maybe of what they would have billed the insurance. So you can get them to do that and then maybe set up a payment plan. But again, if you do a payment plan, I've had people that's had $4,000 or $5,000 collection, and they may set it up for $100 a month. Well, every time that they make a payment towards that, they're updating that account until it's paid off. So you're kind of in a catch-22 where that's concerned, because if you paid it off, you're going to update it. If you don't, then you risk getting sued. So that's kind of on a case by case, but I always want
Okay,
people to
let's
try to
back
do the right
up. We're
thing.
talking about getting sued. So, to me, that means that someone could file a judgment against me. Is that what you mean by sue?
It can for up to 4 years in Texas.
Okay.
Each state has its own different statute and limitations, but Texas is 4 years from the date that a payment or a service was rendered.
Okay. All right. So again, medical collections count the same as a utility bill collection or apartment early cancellation. A collection is a collection is a collection in the scoring system for
Correct.
FICO, correct?
Score-wise.
Yeah.
That is correct.
Okay. But some of the other scoring systems do not weigh so heavily if it's medical versus some of the other collections. Is that correct?
That is correct. Your FICO is one thing, and then you have the Vantage, to where if it's a paid medical bill, it may affect it a certain way. If it's an open medical bill, there's one Vantage score, I think, that if once you pay it off, it doesn't factor it in. So FICO isn't like that. FICO will take into consideration that it's a collection, paid, unpaid. They just look at the activity date. So that's kind of where your scoring models are going to differ no matter where you go to.
Okay. So I just, the one thing I don't want anybody to be is discouraged, because, sometimes things just happen and you got to figure out where do you start in getting things straightened back out, leveled back out. And we just finished up, well, we're still not finished with some pretty gnarly times for the last 12 months. So there may be more folks that have experienced some bumps and bruises on their credit. So in the event that they have those questions and they really want to begin this journey, what do they need to do to really assess where they're at, find out what their baseline is, and what actions can be taken in order to help them, whether they're looking to buy a house or whether they just want to take pride in their credit again and they kind of lost a little bit of control over that for whatever reason. And so do they give you a call or go online? What does that look like?
Yeah, they can give me a call. On my phone number, they can Facebook me. They can go to acecreditconsulting.com and just type in my name, and then it's going to be referred over to me. A lot of times in the last 12 months with COVID going on, depending upon the company, a lot of companies kind of take that into consideration, as long as it's only maybe one late payment. If it's constant or they have a history of late payments, there's not a whole lot that a company will do. But if you've had great payment history, you kind of something has happened due to COVID, many times you can contact them and they'll kind of work with you, as long as, again, it's not a history of that. But I always want someone to reach out before that were to happen. If they lose a job, contact your creditors, kind of tell them what's going on, see if they'll work with you, see if they'll do a deferment on a payment for auto payment or whatever it may be, and just see if they'll work with you. Some companies will, some won't, but it doesn't hurt to ask. The worst thing they can tell you is no. But
Well,
yeah,
and with the CARES Act, the creditor, the guidelines in some federal regulations actually even changed for CARES Act. So you guys don't hesitate to ask those questions.
correct.
And then after the hardship is over, then make sure you get yourself back on track. So, sometimes, like I said, things happen. My gosh, I've experienced a lot of ups and downs in my life personally too. So I totally understand and get it. But knowing who to call, what questions to ask, and what you can do to put yourself in the best position that you can possibly be with the circumstances that you have is always the goal. If
Yeah.
you're looking to purchase a home and you think that you might be buying a house in the next 6 months, it's not too early to go ahead and complete an application. Let us go ahead and pull your FICO score and see exactly where you're at. So we've got plenty of time to work on it and coach you up and put you in touch with Michael if we need some formal help in getting things taken care of. Information is important, and knowing your resources and who to call and who you can trust is super important, because there's a lot of bad information out there as well. So make sure you're
It's also
going
good
to
to,
trust
to
and
try to
reliable
raise your
sources.
credit scores right now, because what I've seen is a house will go on the market and you may be in a bidding war. And the higher the score, the more home you can buy, because your interest rate will be lower. So, that's another factor that I've seen. I've seen someone that had over 30 offers on the house. And, if you're in that kind of a situation, you want to have the most buying power that you can.
Absolutely. And right, the higher the score, the more flexibility you have in the financing available, the lower the interest rate. And believe it or not, it matters to the seller, because they want to know that you're a strong, stable, able buyer with a lender that's reputable to get everybody to the closing table. So all of that matters right now in this
Correct.
market, for sure. Well, thank you so very much. Next week, we're going to talk about what? What did we say we were going to talk about?
Paying off accounts to zero balances and leaving them, and try not to have any open lines of credit, and how that can actually be a bad thing.
Okay, so that's our myth. Our myth next week that we're going to talk about is paying off all of your credit and having zero balances on those cards, and even closing those accounts. Or is that good or bad? We'll talk about that next week.
Perfect.
Join us. Share this if this information is valuable to you. Assume that it's valuable to others too. Please share it. Have a great
Perfect.
day. Bye bye.
Thank you very much.
Mm-hmm.